In the crypto lounge with a chart so wild, we're dropping beats and rhymes and we're not for mile. From Bitcoin to Ethereum, we're breaking it down. In the crypto lounge where the markets have abound. Crypto lounge, daily live stream, market analysis, breaking news, it's a dream. We're dropping knowledge, we're dropping bars. In the crypto lounge where the beats are hard. From NFTs to DeFi, we're keeping it real. We're dropping knowledge, and we're making it feel. From bull to bear, we're always on the grind. In the crypto lounge where the market's never blind. Crypto lounge, where the toll lounge, where the market's never blind. Crypto lounge, daily live stream, market analysis, breaking news, it's a dream. We're dropping knowledge, we're dropping bars. In the crypto lounge where the beats are hard. We're dropping knowledge, we're dropping rhymes. In the crypto lounge where the future shines.
All right. Welcome to the show, guys. I hope you guys are doing very, very well. We have a very interesting show today, and it's about DeFi. It's about the future of DeFi, and a lot of you probably partake. I think it's going to be very, very advantageous going into the future. Welcome, Brandon from Shield. Are you with us, sir?
I am here. Can you hear me?
Yes, absolutely, man. Welcome to the show. Hand clap to you.
Thank you.
Absolutely. I'm gonna go ahead and put let me go ahead and add that. I think you are here. Let me see here. There we go. Let's go ahead and get into it.
Yes, sir.
Excuse me. Let me get a little water real quick. Okay. Got a little coughing fit right before the show. It is a Monday. So again, let's get into this now really quickly because I want to dive into it. I got a lot of questions. And again, pardon me, voice is kind of cracking right now, but I think I'm getting it back. Brandon, again, welcome to the show. This is going to be the Shield AMA, just in case you're wondering here. What we have here is the mother page, and we're going to get into DeFi. Brandon, you want to introduce yourself, brother?
Yeah, for sure. I was going to say I should probably give like a quick background of how I got here. I originally got into cryptocurrency investing about 6 years ago, and I started like so many people do. I was all about the meme coins. I was all about the hype. I was all about the get 100x in 3 weeks kind of moonshots kind of stuff. And it was, for me anyway, I know there's a lot of people making a lot of money in that space. So no hate on that space for sure. Just for me, it was like a roller coaster of emotions. And I found myself like, I would lose a lot, I would gain a lot, I would lose a lot, I would gain a lot. And it was so volatile and so up and down. I just thought like, man, there's gotta be a better way. I mean, yes, it's DeFi, yes, it's emerging markets. But I was like, I know there are like very useful and utility driven projects out there that make way more sense for the long-term investor mindset. And that's more what I wanted to operate in. So I started doing deep dive. I started joining, all the masterminds, all the programs, all the courses and whatnot. I just like went through so many. Some were great, some were trash. Like that's just the nature of the game.
There's a lot of trash out there.
Yeah, exactly. But it was great. I kind of sifted through the garbage and found the gold, basically, is what happened. And I stumbled on an approach that leveraged yield farming. And yield farming is something that people have probably heard the phrase tossed around. It can mean a lot of different things for a lot of different people. But when I say yield farming, I just mean participating in any project or projects within DeFi that allow you to contribute to the ecosystem and then get rewarded. And typically that will come in the form of either reward tokens and or trading fee income, meaning you pair some assets together, you become a liquidity provider, and you get rewarded by doing that because you're making that liquidity pool safer, faster, and more reliable for other people who want to participate in that. And for me, that was the compelling idea, was that, oh, I can now become a contributor to DeFi and I'm rewarded for making a system better versus some of these other protocols that are out there. Like I said, the meme coins that are basically just, you try to buy low, sell high, get out quick, and you're done. Whereas with projects like Shield and many others that I've seen in the past, you actually have an opportunity to contribute to the stability of the project. But it's not like, oh, just please do it altruistically. It's like, no, when you contribute, then you should be rewarded for that. And Shield is one of those protocols that provides multiple layers and multiple pathways through which you can get rewarded as someone who chooses to contribute to the stability of the project. And obviously, if you're going to contribute to the stability of a project and you believe in it, hey, why not become an investor as well? That's kind of part of the premise of all of this, is when you are a liquidity provider, you are also an investor in the project. And so you're able to make it stronger, but you're participating in that decentralized space, meaning everyone kind of comes and goes as they please, but if the incentives for the individual investor are strong enough, then the likelihood that those individual investors will stick around long term is infinitely higher. And so when you create an environment that incentivizes, in a decentralized environment, that incentivizes individual investors, then it's much more likely to keep the project going and growing long term.
No, you're absolutely right. And you mentioned the stability factors when it comes to a protocol of this nature. That's very important. It's very important. You want stability. You want a mechanism that has longevity when it comes to stability. Audits as well, but stability. We're talking DeFi here. We're talking yield-bearing protocol. There's a lot out there. I've seen them come and go, and a lot of the actual shortcomings had a lot to do with stability. And this, I'm seeing a lot of stability mechanisms twofold within this platform. You want to expand on that, because I think that's very important when dealing with these type of protocols and platforms. Stability.
Yeah, for me, I would say one of the foundations of creating stability within a project is having enough liquidity.
Yeah.
So, a liquidity pool, I've heard it explained metaphorically as, like, think of a real pool. You know, if you've got a little kiddie swimming pool, then you throw a big rock in there, it splashes around, it drains the whole pool. But if you have a massive Olympic-sized swimming pool, lots of liquidity, and you throw a rock in there, it might stir the waters a little bit, but ultimately the pool is going to be fine. Yeah. And the same principle holds true with these DeFi protocols, which is, if you have a really high market cap, but you don't have the liquidity and stability created by the liquidity, if you don't have that to back it up, then if there's a buy or a sell, then that market cap is extremely volatile. It's going to go up and down really, really fast, kind of like an easy come, easy go type of a situation. But if you have a market cap that's backed up by deep liquidity, then any individual moves don't stir the waters quite as much. And that's the exact opposite of the meme coin play. The meme coin play is, look how quickly chart go up, but guess what? Then look how quickly chart go down as well when people start selling off. Versus if you create a stable protocol, that means you have deep liquidity. Well, how do you get deep liquidity? Again, we circle back to, if you incentivize the individual holders to become liquidity providers and you give them rewards and trading fee income as a result of doing that, then they're more likely to continue doing that, because those base assets are producing a yield, is producing something. So if I'm getting paid every week, every month, every year on an investment, I'm more likely to hold on to that investment if it's generating cash flow for me.
No, absolutely, absolutely. Now, let's talk about Shield. Let's talk about the token, and then we're going to segue into the synthetic values of the actual mirror of BNB. We got to get into that as well. We're going to get deep into it, guys, especially with the fund managing, the index funding, the passive income twofold. We're getting deep into this because this is DeFi, right? This is what we're here for: passive income, yield, massive yield, and stability, and just being involved into something that can basically is what I've been taught all the way since I was growing up. The best thing you can do is to allow your money to be in a position to make more money. And this is what we're talking about, right? This is what we're talking about. Let's talk about Shield because it's very important. This is the totem of the platform, the Shield token, use case wise. Let's get into that, Brandon.
Yeah, for sure. So the heart of it all is going to be probably the first one that's going to get released, I believe, is the synthetics. Okay. So the first one will be a BNB and BNBX pair. And, you know, I think if you click, if you scroll back up and click on the Farms tab, you'll be able to see, or OpenD app, sorry, OpenD app.
Oh, absolutely. We can segue to the D app. Okay. Absolutely. Let's go ahead and do that.
And then if you go to Farms, just so people can kind of see a visual there. Yeah. So you see that first one there, it says BNBX/BNB. And if you're new to this space, you might think, well, what is that? What does that mean? So normally when you become a liquidity provider, you pair together two different assets. So the farm right below it is a great example. There's BNB and Shield. If anybody wants to swap BNB for Shield or Shield for BNB, they would pass through that liquidity pool. And that liquidity pool, now anyone can be a liquidity provider for that. So that's a little more traditional route in terms of an option for liquidity provision. And you'll see pools like this on all the major dexes, okay? But here, we've also got this one called BNBX and BNB. BNBX is simply a synthetic form of BNB, meaning that you can create you mint a new token that is pegged to the price of BNB, and then you pair them together. What happens when you do that? Well, a couple of things. Number one, because the two assets that make up the liquidity pair are pegged to each other in pricing, that means you won't experience any of the volatility normally associated with liquidity pairs and impermanent loss and fluctuating up and down, which you can navigate those things easy enough. It's just that this is creating a unique opportunity in that sense. And then you take that pair, and anytime someone wants to trade BNB for BNBX or BNBX for BNB, you're now not only going to get a portion of the trading fees that are generated from that specific pair, but you're also able to stake the LP itself, the liquidity pair. You can stake that, and you're going to get rewarded with additional Shield. So if you see that little box on the right that says reward, that's where it's going to start to tally up how much Shield you are getting rewarded with. Yeah. So down the road, I'll be publishing tutorial videos on like the click by click of how to actually do that. So we don't have to get into any of that today. I just wanted to highlight the fact that this, like, it's there on the site right now, but it will be launching. I don't have a hard date from the dev, from Wizard yet, but it will be one of the first utilities that we launch, which will be minting the synthetic, creating the pair, staking the LP, earning rewards. So if you've never done that before, it might sound a little complicated. I'm going to break it down into like a step-by-step tutorial video so that you'll be able to participate in this way if you so choose.
So the Shield token, it's got a pretty decent use case. There's utility here as well. It's a staking token. You can do some liquidity farming, just like you explained it. And we're going to get into the BNB and BX relation too, because it's pretty interesting how that works out. Kind of mirrors BNB, and there's some stability mechanisms there to keep the price linear to talk about that too as well. But here are the use cases: staking, rewards as well, passive income, LP farming as well. We were just talking about that, and it's a DAO token as well. So it has three distinctive use cases. You want to expand on that DAO? Most people know what a DAO is, but intrinsically, when it comes to this token, it's pretty heavily involved here as well. It's a vote, empowerment, ownership, community driven.
Yes.
You want to expand a little bit on that relation?
Yes, that is super critical when we talk about the long-term value of a project, because when things launch in the short term, people get excited about quick profits. I do too. Like, that's totally normal. And you go, oh yeah, staking, oh rewards, oh liquidity provision, like those are great, and you're gonna make a little extra profit here and there from that. But one of the long-term values behind holding Shield is the DAO and the governance. Meaning that when you hold Shield, you will get a vote in how some of their, like when they launched the Shield AI Fund Manager, when they launched the Shield Index Fund, some of these other long-term opportunities that are come down the road, you'll get to participate in the governance of how those things get allocated and where all those funds go. Meaning that, and this is just my opinion here, but I think there's a strong argument for this, that the value of holding Shield, the governance aspect of it, will long-term be even more valuable than the price on the chart. Now, that doesn't mean you can never sell any, right? I'm sure
absolutely,
some people will sell a little bit here and there and take some profits. Nothing wrong with that. But long term, you're definitely going to want to have a bag set aside specifically for the governance aspect and the additional utilities that will be released long term as a result of that.
No, that's what you want in a token, because we were talking about memes versus utility, memes versus altcoins. There's a big difference there. Memes have their place, but when it comes to utility tokens, when it comes to these altcoins, I'll be honest, there's some altcoins out there too that are pretty empty too as well. But the ones that are robust usually have this type of tech behind them, usable tech. There's some real world applicability here too, because I was looking into the paper. The real world aspect too of this platform is pretty interesting as well. We may get into that a little bit, and I'm talking about health. I'm talking about green energy projects. When it comes to those funds, we're definitely, and you mentioned that too just now, the actual fund manager, the Shield Index Fund. I want to circle back before we get into that, because that's very exciting too, because there's some real world attachment there, and that's what I love. This is what I look for when I look for tokens and coins. Is there some form of real world presence that it can actually hold on to? And it's here. It's definitely here. As far as the price equilibrium mechanism, let's get into that, because that's part of that stability factor that a lot of these DeFi platforms just lack. They just don't have. Now, and I think this is pretty interesting. You want to expand on that, because that does have a lot to do with the actual synthetic token in that relationship and keeping that value linear when it comes to BNB versus the synthetic.
For sure. And on this one, I'm going to explain it the way that I understand it, fully acknowledging, like, if I wasn't clear before, like, guys, I'm not the dev on this project. Like, I did not put all the code together, but I'm more of an investor and a user and someone who gets excited about projects like this that have real utility. So the way I understand the price stability mechanism here is that when you mint BNB into BNBX, a tiny fraction of that goes into a separate wallet. And then that wallet, the funds in that wallet, are used to bring new buys to the chart in order to achieve price stability. So what that means is, anytime any individual investor uses any of the mechanisms on Shield, yes, there's these like fractional percentages that are involved there, but all of that goes back to support Shield as a whole. So it's not like, oh, someone behind the scenes is just like pocketing these little bits. No, that's not how Shield works, and it's all transparent. It's all in the code, where those individual little fractional percentages come back around and support the project itself. Now, if you want to get into like the real nitty gritty of like how that actually works, I would encourage anyone who's taken a look at this project, whether you're invested yet or not, go to the Git book. And I think we can probably post that link somewhere, maybe in the Telegram chat or on your x.com account.
Absolutely.
We'll post the link for the Git book, and you can, that thing is dense. It is dense, but it's great. Like, you read through it and it'll walk you step by step through how all of these little fractional bits work, how they function, and where they end up going.
Yeah, definitely going to put that in there. There's a wealth of information, especially if you love doing your own research. You're going to have a lot of studying to do because it's in here. There's nothing that's hidden behind the curtain, and it's very exciting read too as well. I love the CR system, the collateral ratio system. Keeping that synthetic token in line with BNB is very important, and you guys have made sure that that is actually implanted pretty properly. There's two forms of stability factors here, along with the shield stability factor when it comes to that passive income. It's really cool. I'm looking at the arbitrage control, the incentivized stability program.
And your question was about the price equilibrium mechanism.
Yeah,
and there's
absolutely.
a whole section in the Git book
just
about the price equilibrium mechanism. So if you want to get into like the deeper mechanics of everything, I would strongly encourage anyone to go check that out. It's all published. It's all completely transparent.
Absolutely.
Which, again, when we talk about what's one of the characteristics of long-term projects like this that are actually have solid utility and are useful and are going to be around for a while, is that they're publishing and they're transparent about what's really going on behind the scenes.
Absolutely. That's what I want to hand clap that, man, because that's very, very important. Stability is very, very important because, like I told you, I've seen these things collapse, and the main reason why is because there were no stability mechanisms within the protocol, and if they were not robust. So I commend you guys for this. It looks like you put a lot into those stability factors. Let's talk about this index fund, because this is something that we see in the real world now in a DeFi setting. And mind you, those real world situations, the output is not as great as it used to be. I prefer the DeFi route. I love the yield that you see in DeFi. Let's expand on this. Now, there is a Shield AI fund manager. We can do a light graze across that, but let's really get into the aspects of the Shield index fund, because that is the core. I believe so, Brandon. Am I correct?
Yeah, that's going to be long term. That's going to be one of the pillars of the value behind Shield. And again, I'll just kind of touch on this from a higher level, and strongly encourage anyone to like dig into the details.
Absolutely.
If they want to. But you'll notice one of the key features is that there will be tokenized index funds, meaning that...
Very excited about that.
Yes, meaning that you can, like, think about traditional finance now, right? You can go and say like, oh, I want to buy a share of the S&P 500. So you buy one share of this stock that actually is 500 stocks mashed up into one little package. So in that sense, there will be tokenized versions of that happening in DeFi, and the Shield Index Fund will be participating in that mechanism. And so you'll have an opportunity to either participate by buying Shield, or you'll have an opportunity to participate by buying a fund-specific token that will be managed behind the scenes, and you just enjoy the fact that you can get the tokenized version of that index and enjoy the long-term gains from those projects.
It's very exciting. Now, tokenized index funds it's going to grow. It's going RWAs. I get very excited about this. Now, within this platform, you'll be able to invest in that. Now, here's some of the actual situations that are going to be available. And again, this is an ongoing situation. This is part of the innovation of this platform. Like you said, this is a long-term platform. It was never intended to be a pump and dump, right? This was something that was intended to have longevity.
Exactly.
You know, am I right? Am I correct?
You're 100% right. In fact, we even had people on launch day, because I was there on launch day.
Yeah.
And it did exactly what I thought it would. You know, in the first hour, it pumps up pretty quick, and then some people sell off, no harm, no foul. And then it stabilizes. And that's what people missed. People looked at the chart, just the chart, not the fundamentals, not the Git book. They look at just the chart and they go, oh, looks like it dumped. And it's like, no, look again. It did its quick little launch day thing, and then it stabilized. And if you look at it now, it's on just a really stable trajectory.
Yeah.
And that's not super exciting for people who are used to the meme coin hype. And that's okay. It's not for everybody. But if you know what to look for and you understand the fundamentals behind a project, and you go, oh, this wasn't designed for a crazy wild chart like some of these other things. Yeah. It was designed for stability, and it was designed for all these other utilities that are going to be slowly rolled out over the course of the next few years.
No, absolutely. Now, well, you know, a lot of people are spoiled, and it just depends on what you are looking for when you come into the space. You know, are you looking for just a short, good ride, right? Pump and dump, you know, unfortunately, a lot of people are, and I get it. Or are you looking for substance, right? Are you looking for longevity? Obviously you have that here, and that's what I came into it for, substance. You know, I had my fun earlier, you know, with memes, but I'm more serious now in this space, and with the real world adoption. And we'll get into some of these intrinsics when it comes to these Shield index funds, what's the tokenization of it, and what's being tokenized, and what you'll be have access to. Again, it depends on what you're coming in the space for, right? You know, if you're coming to play, well, you can play, and you could leave crying with your tail between your legs. You know, that's not a good experience. But if you're coming for the realistic value of what's going on with not only the blockchain tech, but, you know, DeFi platforms, protocols of this nature that are yielding massive, opportunities when it comes to doubling and compounding and allowing your money to work for itself and make other money. You can do that in this space as well. And protocols like this with stability, with security factors, is very important. And index funding, real world attachment. This is where it's at, man. This is where it's at. I want to welcome everybody to the live. Hope you guys are enjoying the show. Let's get into the actual tokenized aspects. We're talking about technology and innovation. We're talking about startups, tech startups, guys, blockchain projects, SaaS platforms, green energy focused renewable energy projects, carbon neutral initiatives. Those are in the space already, as well as outside the space. Healthcare and biotech. This is pretty cool. I don't know if you want to expand on this, Brandon, when I finish with the last one. That is going to be part of those tokenized assets. Those are sector agnostic funds is what it says in the paper. I love this paper, by the way. Very exciting. And real estate too. We see tokenized real estate taking off. All right. You're going to have that too, that tokenized exposure when it comes to residential and commercial real estate. You want to expand on that? Because I was pretty excited to see this going to be a part of this fund.
Yeah, for sure. And I'll just reference here the example use case from the Git book, because I think this is a really descriptive and concise explanation of anyone who, you know, they're just kind of like, oh, I'm curious about that. Like what's really going on there? The example use case in the Git book is saying, hey, an investor seeks exposure to the renewable energy sector while maintaining diversification. And you could put any other category in there. It doesn't have to be renewable energy. But if it was renewable energy, you could purchase the green tokens, or whatever it ends up being called, the Shield Green Energy Fund. Yeah. And then you would have exposure to all of those various options just by purchasing a single token. And again, if we draw a metaphor from traditional finance, same idea as buying like an S&P 500 share, where you're exposed to 500 of the top companies and the performance of all of those put together. Yeah. So the investor then can earn rewards from the fund's growth and participate in governance to influence future asset inclusions. And that's what I was talking about before, how the governance utility of these tokens, specifically Shield, long term, that has potential to be even more valuable than whatever the price on the chart is.
Yeah, absolutely. And it's, and we'll save a lot of these technicals when it comes to the AI management of this fund, which I think is very, very, very interesting. That part of it, I have to tell you, this is what you're seeing that's going to be snowballing going into the next 5 to 10 years, not only within our space, but outside of our space, these AI fund managed situations. This one may be a first mover, guys. I think it may be a first mover, especially when it gets off and running. It's very intrinsic, and you don't see this very often in these DeFi platforms. And you're going to have an AI algorithm, but an AI situation running this. And just to briefly go over it, and I'll do this, Brandon, because I know you don't want to go too deep into this, because this is very exciting. There's going to be monitoring and adjusting fund allocations based on market data, asset performance, and sector trends. There's going to be an IA-based fund manager. I think that's phenomenal. It takes a lot of the hard work out of it, and this is where we are going. It's already happening in the real world. So I think this may be a first mover, and I feel like the community should be very excited about that aspect of it, Brandon. You don't have to go too far into it. I understand, brother. We're gonna do a couple of more. Go ahead, brother.
I can say this. AI tends to get hyped a lot, right? Yeah. Because it is. I mean, it's inevitable at this point. And it's not gonna be, and I don't know how much of this is public, so I don't want to share too many details here.
Right.
But it's not gonna be like what you see now in crypto is like, oh, look at my AI bot, right? It's just a bot. It works for a couple of weeks and then it usually falls flat on its face. Versus when you spend years and years and years and a lot of capital developing an actual AI algorithmic system. That to me is the biggest difference, is who's involved, what's going on behind the scenes, and what sorts of resources are they putting into the AI. And again, a lot of the AI that you see out there is hypey, and it's very shallow. So it'll work for a little bit and then it'll fall on its face, versus when you have a longer term mindset and the AI is developed over many years in trial and error and works towards we call it raising the floor, meaning like if the AI is focused on constantly winning, it'll eventually break. But if the AI is focused on always minimizing or eliminating possibilities for losses, it ends up growing strong over the long haul. So that's just a shift in perspective, saying, hey, I've got this AI algorithm. How do I want to start the programming parameters? Because like we're still at the phase where the humans tell the AI what to do.
Right.
Maybe that'll change 20, 30 years down the road.
I think we're quickly transitioning into the AI basically learning on its own. I read some articles recently, kind of interesting on how these particular models, these particular entities, I guess we can call them entities going into the next 5 years, you know, they're going to be learning on they're just going to have the data, it's going to be fed data, and they're going to be actually learning on their own. And I think it's happening right now. It's crazy.
Yeah. And if the premise of setting the AI free to learn on its own, if the premise is teach yourself how to avoid losses, then you'll end up winning long term, versus if the initial parameter is teach yourself how to make these massive gains constantly. So that might seem like an obvious thing, but I promise you most AI trading bots are not working with that premise.
No, absolutely. You know, they have data sets. They're fixed. There's a lot in the pipe right now when it comes to that evolutionary pattern of AI. And I don't think we're going to, some may say on a conspiratorial level that this is like 50-year-old technology. I don't know. I talk with guys about that and they tell me this AI, we're just seeing it right now, but it's been learning for 50 years. I'm like, I can't wrap my head around that. I can't imagine that AI that we know right now that seems so new has been in existence for 50 years. It could be possible, but I don't know, you know. As I want to circle back to the staking because lock periods, this is very important, that we need to expand on this. When it comes to how long do you have to stake? Can you pull out? Is there a penalty for pulling out early? Is there flexible staking options available? What are the lock periods? You want to get into the nuances of the staking because I feel like a lot of people are going to be staking this shield token.
Yeah, for sure. And off the top of my head, I don't know the exact numbers on the penalty for early withdrawal, but everyone should know that it is there for sure.
Right.
So there is a minimum lockup period for the staking in this particular protocol, and that's by design. And the reason behind it, of course, is stability. If you have a staking protocol where everyone can stake and earn a bunch, but then just like way back in the day when staking protocols were first getting released, they were very one-dimensional, right? It would be like, buy the asset, stake the asset, earn more of the same asset, and like that was it. But it's easy to see the vulnerability there. You buy the asset, you stake it for a couple of days, you earn more of the asset, and then you just unstake it and sell everything at a profit. So it creates this wildly volatile environment. Whereas in this environment, when there are lockup periods, you create the opportunity for people to come in, invest in the project, and if they're planning on staying long-term anyway in anticipation of the coming utility, then they say, hey, let me lock this up. I don't need it right now anyway, so then I can lock it and then enjoy all the rewards that come along with that.
No, absolutely. Now, I could let me share a little bit of info on that too as well. 28 days is going to be the lock period for the normal situation. There is an option for longer durations, guys, as well. The higher the return, it just depends on how long you stake. Obviously, when it comes to staking anything, the longer you leave it in, the more you're going to get. All right. If you're going, I know guys that are stake for 3 days and then they get really antsy and they pull out. I'm like, what are you doing? There's just no reason to pull out in 3 days. What the hell are you doing? So, the higher the return is dictated by the longer you stake. And obviously your weight too. The more you stake, the more you're going to get. So the minimum is 28 days I see here in the paper. Now, when it comes to the early withdrawal, that looks to be a 50% penalty. And this, I'm talking about this one particular, the normal staking that has a 28-day period. So if you are pulling out, you're going to get hit 50% penalty. And that's pretty standard. Even with the minting situation with Zen Crypto, you pull out early, you get penalized. I think this is pretty standard. There's a penalty there. Here is the I love this flexible option, because I think every staking pool should have a flexible option. If you want to pull out, if you just want to stake for a week, you should, whatever you want to do, whatever floats your boat, right? You just want to stake for a week, you should be able to do it, right? That is an option here, and I love this. You do have a flexible staking option, no lock period within this option as well. Your reward level is going to be very much lower than your lockup of 28 days, which is probably what I'm going to be doing. I'm going to be locking the tokens up as long as I can, because I want a yield. You know what I'm saying?
Right, exactly, yeah. And if you're investing in a long-term project, it makes sense that you'd be there for at least 28 days.
Absolutely. I like maybe 120. This is what I'm here for. That's how money makes money. You gotta let it sit. But we have people who want to do what they want to do, and that's okay. You can do that. This flexible staking option is available here. No lock period, obviously. No fixed commitment. And LMFG says 2+ years for you. He's a staker. LMFG is a seasoned staker. Yeah, I hear you, brother. Access fees, you have flexible staker shares. Let's get to this. The protocol fees are shared. This is interesting too as well. You want to expand on that when it comes to protocol fees?
You're talking about the fee sharing.
Right. Let's get into that because that's
so. Like I was talking about before, those fractional percentage fees that are taken off of transactions. So from minting to liquidity provision to redemptions, a portion of those are distributed to stakers. Meaning that if you are an investor and you take your shield and you lock it up longer term and you keep it there for at least that 28-day lockup period, you get to participate in earning a portion of the fees that the platform itself is generating. So in the same way that providing liquidity on any platform gives you a chance to earn trading fee income, participating in this way with the Shield protocol allows you to earn not just trading fee income, but any of these transaction fees that are accumulating at any given time. So again, rising tide lifts all boats kind of a situation. While people are using the protocol, there are these small fees being generated, and you get to play both sides. You get to participate as an investor, but you can also choose to participate as a recipient of a portion of the fees that the entire platform is generating.
Absolutely. Now, as far as LP farming, liquidity farming, right? This is OG stuff, right? This is old school. I've been doing this for a while. You have a 2-week vesting period on that situation, all right? So during that time, the tokens remain staked and continue to accrue additional platform fees as well, enhancing your overall earnings. So you guys know about LP farming. You know this. I just wanted to put this out there. There is a early penalty of withdrawal too with that situation, 50%, and 2-week vesting on that LP. So in a nutshell, you do have a flexible option. And for those of you who like to stake for 2 days, you can do that, right? You can do that. And if for those of you like myself and like LMFG, we like to let it sit, especially if the token has use case and utility. It's attached to a platform that is yielding beautiful things, right? I want it to sit, and definitely that's where I'm at. So there's an option. I just want to touch on that just a little bit, Brandon.
Yeah, for sure. And I mean, the most obvious reward that you get straight out of the gate is earning shield tokens. So when you contribute to any of the liquidity pools that are found on the Shield protocol, then one of the reward layers is additional Shield tokens. Now, here's the kicker, though, and this is really important because we didn't talk too much about tokenomics.
Oh, absolutely. Shield, we can definitely get into that.
Yeah, because it's related here. With Shield, there is a fixed limited supply of, I do believe it's 50 million, if I'm not mistaken, 50 million total tokens that will ever be put into circulation. Yeah, there it is. Total supply, 50 million right there.
Absolutely.
And so one of the reasons that's important.
By the way, I don't want to interrupt you. By the way, that's a very sexy token supply. I love them when they're low like that. By the way, when it comes, and I have to preface this, I have to say this to clear that up. When it's dealing with DeFi, with this type of protocol, you want those token supplies low, right? It increases the yield, it increases the return, it makes the token that much sexy. But go ahead, bro.
Yeah, no, and that's it's critical because you'll see other protocols that also offer rewards tokens, but they constantly mint new tokens every single day.
Absolutely.
And that's not always bad. Sometimes it can be good, but you just have to understand ahead of time that you're being rewarded with an asset that is inherently inflationary, right? If you're constantly minting new coins for the supply, it's just by its nature, it's inflationary. It can still be profitable, but you just have to know ahead of time that that's what's happening. Versus a fixed limited supply like Shield, 50 million total supply, you're getting rewarded in a token that is inherently stable, if not deflationary. And so then you go, well, where are the extra Shield tokens coming from then? Yeah. But you can see right there, it says liquidity mining, liquidity provision, the token supply that's been allocated for those things, and how they'll be distributed. And again, this is something that if you want to do the deep dive, go to the Git book, take a look at it. It's all published, it's all transparent. But the point of what I'm trying to make here is that you're being rewarded in a stable asset. You're not being rewarded in something that's inherently inflationary. Yeah,
we're talking 45% of this token supply is allocated to that liquidity and liquidity provision. And this is owned by, this is not rented or anything, liquidity, guys. This is totally owned. It's internally owned. So there's that stability factor, right? That we were talking about, that you don't. A lot again, guys. I've saw a lot of these things collapse, and I know why they collapsed. And I'm seeing a lot of preventional measures here when it comes to this. Let's see here.
Now, the other thing I think is important to highlight here too. Take a look at where it says team allocation.
Okay, so what we have here is very low. It's a 2.5 mil, 5% of the supply.
5% of the total supply for team allocation.
Right.
Most meme coins, and probably most crypto projects actually, the team allocation is more like 80 to 90%.
Yeah. Well, don't get me started on the meme coins. Yeah. Well, I mean, they're sniping their own supply, so I mean.
Exactly, and you're like, man, the deck is stacked against me if I'm not on the internal team.
Yeah.
And by the way, I'm actually not on the internal team, so none of that goes to me, just in all transparency.
Right.
I am an investor. So like anybody listening here who is either already invested or thinking about investing, like that's the category I fit into as well. So I'm just another investor. I've done my research. I know some of the people involved, and that's why I'm choosing to support this project in the way that I am. But that 5% team allocation, again, you just talk about some of the details that are so critical to lend stability and validity to a project. Like you don't get that kind of token allocation very often.
No, you don't. And I mean, this is a serious situation. You guys aren't doing this just to be jacking around, just to say it lightly, just to put it in layman's terms. You're not jacking around here, man. This is pretty drawn out. And that AI model that you're going to be implanting into that index fund, that AI manager, that's some serious shit, bro. That's not, you're not jacking around there. You're really trying to do something very stable and very secure as well. We're going to be doing a couple of follow-up lives where we're going to get technical on the next one, guys, when it comes to this AI fund manager, the security factors, collateral ratio system, things of that nature. Quick zap. We're going to be talking about the flash loan protection. We're going to get into that on the next slide. Very technical thing.
Yeah, I was just about to say, sorry to cut you off there.
Go ahead.
I have to bounce in about 5 minutes.
Yeah, we're going to roll. We're going to close it up.
Ask you if we can, like after the fact, we can chat and kind of plan on doing another one of these.
Absolutely.
And maybe anyone who's watching, like if you're also in the Shield Telegram group, like if you want to see more of these, like just let us know. Like, was this helpful for you? Is this the kind of information that you're looking for? Let us know in the Telegram chat so we can have some real dialogue and feedback from the community.
Absolutely.
But unless I hear different, then I'm going to plan on coming back and doing some more of these, because I feel compelled to help people understand what they are getting invested in, if indeed they choose to invest in Shield. But I'm a big believer in, if you don't understand it, don't put money behind it.
No, absolutely.
I want to put people in the driver's seat and say, like, look, I'm just going to help you understand it. Whether you put money behind it or not, that's your decision. That's fine. Everybody makes their own choices there. But at least you want to understand what it is that you could possibly be investing in.
Do your research. We always say that. There's a lot of research to be done on this one. I gotta tell you, we'll stop by. Yeah, we're definitely gonna follow up on some techie stuff next one. We're gonna wrap this up here in the next 5 minutes too. Before we do, let's go. We gotta go to this chart. We gotta go to this chart because you guys just launched this. This is a really fresh launch. And I'm looking at the consolidation. Really nice run up here within the day here as well. Very excited. This is a fresh launch. I want to talk about that because, and again, the metrics, guys, is getting to the metrics. Liquidity is locked, 130K. This is a fresh launch, guys. The 12th of February, 2025. You guys are just getting this off, and you already got a very robust future ahead of you. A robust roadmap. You're gonna have the synthetic token launch pretty soon. That's gonna make BNB very sexy for you guys. Very, very sexy capture there. Market cap 1.5 mil. Very decent running of the chart. Brandon, you wanna touch on this before we get out of here?
This chart is a thing of beauty, and it looks exactly like how we would expect it to look. And this is what I was touching on before. Some people saw that first green candle, right? What are you on, 1 hour candles? Some people saw that first green candle, they see the spike, and then they see it come back down, and they go, oh, guess the project's dead. And I'm like, all you did was look at 2 1 hour candles. You didn't read any of the fundamentals. You didn't research the Git book.
Right.
And if you're meme coining it, that's probably all you need to look at is the chart. But here,
because nothing's behind most memes. No substance.
Behind it. Yeah. What we want to look at is the established floor. And from here, you can see that floor is right around just under 2 cents is the new floor. And what we want to see is not rising peaks. We want to see a rising floor, because that is actually what indicates it's a reflection of a project with stability.
You can clearly see that too as well. And again, substance creates that. We all know, back, 2020, 2021, before all of this pumped out fun stuff, Memes, real memes, the real good memes, they took months for the community building. It took months for them to actually reach those high market caps. We're getting that up on launch now, and we know why, because of the pumping, the bundling, things of that nature. These things are launching at $2-3 million market caps, right out the box. So we know that's fictitious. We know there's some mischief there within that. When you're dealing with substance, when you're dealing with utility, this is what it looks like. Because you have building, you have builders, you have devs that are building, actual protocols when it comes to Shield here. So if you are looking for a pump and dump, you're not going to get that with this one. But you do see steady growth. And like you said, you can see the stair step up here, the rising floor, and you guys are just getting started. Getting started. So
and it's critical. And again, if you look at the allocation on the Git book, it walks you through everything, and then fully diluted valuation at launch was 600,000, so 600K market cap, fully diluted valuation at launch.
Absolutely.
And we're at, what'd you say, 1.5 million now. Yeah. So that's what you want. You don't actually want a 10x in the first day or two. Like, that's not necessarily the healthiest version.
No, you're absolutely right.
You want just a slow, steady rise. And if you're patient enough to wait out that floor rising over time, then you'll reap the rewards.
Absolutely. Hand clap to you, man. This is great. And I know you gotta go, so we're gonna go ahead and leave. We'll let you close this out, man. Your parting remarks. I've had a great time. We're gonna schedule some more shows so we can get into the technicals of it and updates as well. We'll talk about that in a little bit. But you want to take us out here? And by the way, thanks everybody for coming out as well. I see you, Mom, out there. I hope you're doing well. Daniel, my boy Daniel. I see everybody. The actual Shield community. I was in the TG. Very welcoming. A very nice community you have too as well, Brandon. There, you guys should be very proud of those.
We are for sure. And just in terms of closing remarks, I would reiterate what we just talked about, which is understand what it is, or at least understand the fundamentals before you invest. Yeah. Okay, so don't just ape into Shield or any project just because someone on the internet is talking about it and how great it is. Go read through everything on your own and make a decision, because if you invest based on hype, you'll get scared away the second that it looks like the chart is doing a retrace or a correction. Yeah. Rather, if you understand the fundamentals, you'll be able to sit calmly and go, oh, the chart did a retrace today. That's okay. The fundamentals didn't change. It's still the exact same valuable long-term project that I invested in on day one.
No, absolutely, man. Again, hand clap to you one more time. It was great. LMFG, you want the URL? I'm going to actually... I just posted the link tree to Shield guys there, and that'll put you in touch with what you need for your research purposes. The GitHub link should be in that link tree. Am I right, Brandon? Should have a GitHub link in that link tree, right?
Yep, it'll be there. Yeah.
Awesome, man. So to you guys, be mindful, guys, of the space as well. Be careful out there, scammers or a muck. Invest in the tech, not the hype. This is what I say. And Brandon, thanks for coming. We're going to schedule some more. We'll talk in a little bit. You guys have a great one. We'll see you on the next show. Have a good one.